What's up, you guys? It's Matt here. So, thank you for joining me on another NFA video. I know I like to talk about stocks and mainly try and focus on what's happening with AMC because it is my largest position and one that really does mean a lot to the stock market as a whole. For retail investors, it means so much because we're putting our heart, sweat, and tears into this project, into this business, um, because of what the system is trying to do to it. We saw what the system did to Toys R Us, and we didn't stop that. We saw what the business or what the system was trying to do to GME. We stopped that, and we saw that GME increase to a way higher price. Yes, they're still struggling to understand what their identity is and where they're going, right? But the point is that we gave them that breathing room rather than the system trying to tear it down. We gave them that breathing room. And we're seeing that same thing with AMC, where the system is trying to tear it down. We're giving it that little bit of breathing room that it does need, right? Because a company shouldn't just be torn down by the system that it's in, right? If firms are attacking the hell out of it and basically bankrupting the company, and they're forced to close their doors because they forced their hand, they forced them to do that, that's an issue, right? That's a big issue because you can't recover from it. For a small business, it's not something where you could be taken out by the system right there, right? Unless you're publicly traded, right? A public company, you can't be torn down by the system there, right? You can find a way to recover, build your financials up, even though maybe revenue is down on that year, your expenses are exceeding your revenue. You can still find a way to exceed, expectations and get back to normal, right? But for big businesses and corporations like AMC and Tesla and Meta and all of them, they can be torn down by the system that they're in, and that's a big issue that I don't stand with. I don't want them to be torn down at all. I want them to have their chance to be recovered, and it seems like a lot of retail traders will give them that chance. So let's talk about AMC a little bit and give you kind of both sides of what we're looking at, not just, hey, this thing is attacked, but also understand what they need to do to get back to a form of recovery, right? And get back to a time to where they're actually profitable. So, guys, hit that like button, hit that subscribe button, hit that notification bell for more videos like this one. Also, make sure you check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter, follow me on Patreon, feel free to check out those links that are down below. But one more thing is don't forget about the referral links. If you guys want to check out this trading platform, it's Webull. I do have a link down below where you guys can sign up and get free stocks. If you sign up and deposit, I believe it's $100 or something. But again, we talk about AMC all the time and how hedge funds are attacking and how they're shorting the hell out of it and they're not giving them a chance to survive. Well, with certain positions, we may have given them a chance to survive. We see what's heavily shorted and we're investing into it, flocking into it. We see that retail traders are holding 70, 80, 90%, and we're listening to everything they're saying. We're more engaged than we've ever been before. There's more people that know about financial statements than ever before. But the point is that we haven't really seen much improvement. So with something like GME, we may not see as much improvement, maybe some debt that's paid off, all that stuff. But when it comes to revenue versus expenses, when it comes to how much debt you actually have on there, you still would have debt and you still do have your expenses exceeding what your income or your revenue is. So that's a big issue because then you have a negative net income. And I think those are the things that we need to focus on to make sure that some of these companies do fix that. And AMC is one of them. We noticed that there's a lot of things that have been, scheduled to be implemented or implemented, like the popcorn business and being able to sell the popcorn. I don't know what that portion of revenue is. I don't know what the expenses are either, but the point is that they're trying to build something else besides just, movies. To build some form of revenue there. And AMC popcorn is amazing. I like AMC. I've been looking for it. I can't find it. I would support it, but I really can't find it. It's supposed to be at Walmart, and I didn't see it in the popcorn section at all. So maybe it's somewhere else. I don't know. But anyways, if we look at where AMC is at currently, we're seeing this at, or it's down about 2.6%. We saw this kind of decrease down to $4.68 and an increase up to $4.87 and kind of been hovering between that level, right? We saw a bounce jump over the 200 EMA, the VWAP, and now it's back down to the VWAP and maybe climbing a little bit. So hopefully it finishes high and we see this continue to grow throughout the after hours market, but it's not 100% confirmed. That's not my biggest concern. We are seeing lower volume today of 14 million, so we're not seeing a lot that's going into it and not a lot of trading there. But a lot of things are red as well. So again, seeing AMC that's down about 2.6%. But then again, that's not why we're here. We've shown the support, we show what we're holding, and we're going to continue to do that. But the bottom half of what you're seeing here is the financials. I'm looking at the income statement for 2022 and just kind of breaking that down and what the overall net income is. And I think that's mainly the issue, is that we're not seeing enough revenues in the door. And maybe that's because movies still aren't 100%. You're still seeing a lot that's going to streaming services, and people are realizing, hey, you know what? They're going to go right to streaming services, and I already paid for the streaming service, so why don't I just wait until it comes? And a lot of those movies that are making the most money are from things like Disney, right? You have Marvel movies, you have Disney movies like Elementals, you have different movies that people are like, no, I'll just wait. We see the prices that are going up for seats and tickets and popcorn and all that stuff. We'll just wait and we'll buy some of your movie theater popcorn and pay less for it, right? You're paying maybe $3, $4 for a whole pack, and you get, 6 different sleeves of popcorn that you can now pop at your own house. So you're not really seeing the same revenue where people are buying those tickets, buying concessions, and that's the big problem, right? While it is something that's enjoyable and people love to do, go and see a movie when it comes out so they can talk about it. Others are just like, I'll wait until it goes on a streaming service. And maybe that's the issue that we're dealing with. And then we're also going to see movies kind of decline because the money that you're making from streaming services versus in theaters is not, a lot. So they need to figure out something here because the revenues are definitely not high enough for all of the different, expenses they do have and debts that they have on board. But you even look over 2022 and you're seeing that you're at a diluted net income of almost $1 billion, $973 million there of, and that's negative $973 million down. So that that's an issue. That it's a situation where it's like we need to pick that up. If this is not improved, they're going to continue to struggle. And you look at it quarterly, and you're seeing the first quarter of 2023, right? You're seeing this quarter that's down 235 million dollars. 2022 fourth quarter, you're looking at 200, and it is increasing, or sorry, it is I would say increasing. I'm trying to figure out the right term. It is decreasing in the amount of negativity, increasing in the amount of net income. So you're seeing positive, basically up 30% that you are seeing quarter over quarter, which is fantastic. And then year over year, again, you're still seeing it up from the 1.2 billion or 4.5 billion. So it's improving, but the issue is that you need to see that improve a lot faster, especially for, a lot of retail traders that are giving them the time to make it up and do better. It's just, I guess, the market that we're in, the climate that we're in, the way people are not going to see movies, that's mainly the issue. So while we look at it from a manipulation side, we also have to look at it from a revenue side and make sure that they are profitable in the end. And, we're just not seeing that profitability, right? And that comes off of like lower revenue that you saw again in 2020, where no movies were really being shown, to a few movies, to way more movies, and seeing the revenue up 54%, 100%, from 2021 to 2020, and 2022 to 2021, you're looking at 54%. So things are increasing here and getting better. It's just, it's got to be quicker, because you see other companies that are doing it a lot faster, but also they were profitable before that as well. I'm trying to see if I can slide over. For some reason, I can't really slide over. But you know what I mean. So, anyways, let me know what you're thinking about AMC, and you know, if you have seen something that I haven't seen, and if we're gonna see some major improvement here. But guys, hit that like button, hit that subscribe button, hit that notification bell for more videos like this one. I'm gonna get out of here, and I'll catch you guys in the next one. See ya.